Today's day number 72 of the $1,000 account challenge, and we're up $1,100 in the account, or 9.32% of the total portfolio balance. This brings us to $13,000 in the account, and we only started with $1,000 a little over 70 days ago. Now, if you don't know, my name is Gates. I'm taking $1,000 and I'm day trading options to see how far we can grow this account. Today, straight off the day trade watch list, we had AMD as a short idea below 161.5. Now, this trade that I took wound up being a losing trade, and it just didn't work for us. There wasn't anything here that we could do on the trade to make it any better other than cut the position the moment that it does not work, which is exactly what we did. So we get an opening sell-off in the first 5 minutes. The next 5-minute candle sells off aggressively and then eventually gets bought back up. 161.5 is right here where this white trend line is. So moving to the 1-minute time frame, when we get a rally up retest of 161.5, I take the position short right here. Unfortunately, we do not get the curl over at 161.5. This rallies up higher, and I wound up cutting this position for, I took a 17% loss. I had to go back and look. I took a 17% loss on this trade. So how could I have made it better? Well, I could have just cut the position here, right? The moment that it reclaimed 161.5, tight stop out, could have got out of the trade there, but I gave it a little bit more room to work and wound up cutting it here. Now, still with me taking a 17% loss, that is not as bad as it could have been, because had I not assumed the loss or cut the position there, then look what happens, right? This thing rallies up all the way back up to the high of day, back up to the opening price almost. So it fully retraces this initial drop. And there's no way that we would have known that that would have happened. So the ideal thing to do when you're in a position that is working against you and you don't have any extra room to add onto the trade, or you're not planning to scale in, the ideal thing to do is to take the entry as close to your stop out point as possible. That way you have a very small amount of risk. Boom, it breaks above that risk point. You cut the trade right away and you do not hold and hope. Unfortunately, I did get a couple of messages where traders did hold this position longer, hoping for a reversal, and they just did not get it until later on. But by that time, they had cut the trade up here near the high of day, near the opening price. So opening trade to start the week was red. Very, very unfortunate. Now, off of the day trade watch list, SPY was a short idea below $511. However, SPY had all of this opening consolidation right here. And this pattern is known as a symmetrical triangle, where you have lower highs as well as higher lows. And we gave alerts today. What I told everybody in the alert room was that we are looking for direction on SPY. I said waiting for SPY to break this consolidation for direction. If it's a breakdown, we can short the rally. And that's exactly what we got. We get this breakdown, but it just keeps selling and selling and selling and selling and selling. So what we could have done here was maybe market buy the breakdown there for the move lower. We could have done that. But what we decided to do, because we didn't market buy, was short the rally that we were given. And I used Fibonacci retracements to be able to identify where I was able to take my short position. Now, I know the short trigger was placed down here at $511, and you might be like, Gates, well, why didn't you wait for it to get to 511? It's because we had a pattern shaping up intraday. I was able to identify intraday price action, a pattern shaping up, giving us a symmetrical triangle to tell us that, hey, once this breaks, we're going to have direction the moment that this creates a lower low or a higher high outside of the pattern. So we did not necessarily need to wait on SPY to break the trigger levels after shaping up this pattern. All we needed to see was the lower low or the higher high, and we get that right here. So well before we even get the move down to $511. So using Fibonacci retracements, I drew myself a trend line from the beginning of this pattern all the way down to the bottom of the move here, and that gives us these retracement lines. You see 23.6 right here, you see 50% right there, and then 61.8 right there. This tells me where to add into the position or where to take the position short on a rally, as those can be potential rejection points. So we get the move up close to 23.6. I take my initial entry here. I add to the position up here at the 50% line, and then immediately we get the curl over and the move down. We hit hit 20% profits there. We hit 30% profits here. I'm scaling out of this trade because I wanted to see how far it could go. I thought that there definitely was room for this to come all the way down to 511, which there was. It just took a while. And then I closed the remainder of the position out over here as it rallied back up. I think I net like 20% gain on the final close there, maybe a little under 20% gain on the final close there. But this was enough to put me green on the day, up $1,100 in the $1,000 account challenge, pretty much solely based off of this trade. Even though we took that 18 or 17% loss on AMD, the trade on SPY, because I had more conviction on this, used a little bit more size, and we got the net 30% profits, a little bit more profits, right? 20 to 30% profits down here at the bottom. I was able to turn that red day initially into a green day. And if I had just held even further down to 511, it would have been much more profits than what I actually net. But hey, green is green, and we cannot be upset about that. So a lot of key takeaways from today's video. Number one, cut the position the moment that the trade stops working for you. It is not unless you're planning to scale in, it is not a good idea to hold through while being down. The idea is to enter at places called pivot points, where either the trade is going to work for you right away, or you are going to cut that trade right away. On the SPY trade, by the way, I would not have added any further than this last add. It would have been a cut. I would have cut the trade if it created a higher high from here. The second takeaway from this is to make sure that you're adjusting to intraday price action, because there is no need for us, when we see this breakdown on SPY, there's no need for us to wait for this to get all the way to 511 to take a short position. We see the intraday price action. We see the symmetrical triangle shaping up. We see the sell-off. We have confirmation at that point. Let's just go in on the trade when we get a rally or when we get our confirmation. And number three, do not let losing trades deter you. I know that AMD trade sucked. It wasn't the best way to start the week, right? We took a loss on that. Nobody wants to start the week like that. But had we let that trade affect us emotionally and scare us from taking another trade, or scare us into sizing down on a trade where we had a whole bunch of confirmation, then we would not be net green on the day, or we would have missed the opportunity to take SPY short because we would have been too afraid to lose more money. That's it. I hope that the video has helped you out. Press that like button for me if it has, and consider subscribing to the YouTube channel for me, as it's just the best way to support me and this type of work that I do. Thank you so much for your time, and I will see you tomorrow when we continue the $1,000 account challenge. Cheers.